India's IPO market is on fire. Oversubscription, record valuations, and every new issue being sold as the next multi-bagger. But one of India's most respected investors, Sandip Sabharwal, has a stark warning. This frenzy might be a mirage built on manipulation. According to Sabharwal, the entire IPO story is becoming more and more murky. He is not talking about minor accounting tricks. He is talking about companies that have been losing money for years suddenly reporting profits right before they go public. Quarter after quarter of red ink, then suddenly, like magic, they are profitable. Why? Because it looks good on the prospectus. He calls it what it is, window dressing. A performance stage not for investors' benefit but for their exploitation. Behind the scenes, promoters are cashing out. They are not inviting you to join their journey, they are handling you the bill. Institutional investors know this, yet they pile in for listing day gains. Retail investors follow blindly, believing if big money is buying, it must be safe. It's not safe, it's the world's oldest trick in finance, the greater fool theory. Someone buys an overpriced asset believing there will always be a bigger fool to sell it to. But when the music stops, retail is always the last one standing. Sabharwal points to a dangerous imbalance. The primary market, IPOs, is boiling hot, but the secondary market, where real business are traded daily, is cooling off. Why? Because liquidity is being sucked out by the flashy new listings. Promoters selling and massive IPO inflows are keeping broader markets subdued. Even though corporate earnings have grown around 16% this quarter, it's like pouring fuel on one fire while starving another. Cut to Sabharwal's opinions. Unlike the crowd, Sabharwal's not chasing this hype. He's sitting on the sidelines waiting for the storm to pass. But when valuations correct, that's when the real opportunities emerge. He is bullish on India's story, not on fake profits and false promises. He expects the next earning waves to come from consumer level autos, telecoms, and large banks, not from overhyped startups with manufactured numbers. He warns, don't ignore the global context. Global markets have run far ahead. If they correct, India will feel it too. The difference is India's base is strong. Earnings are real in core sectors. Sabharwal specifically calls State Bank of India a standout, expecting a 15 to 20% upside as re-rating continues. So, while everyone chases quick flips in IPOs, veterans are quietly accumulating large caps, patience, discipline, and ruthless. The IPO wave isn't about growth, it's about greed. Retail investors are mistaking momentum for intelligence. Sabharwal's warning is simple: you're not investing, you're donating. And the only people collecting your donations are promoters walking away richer. When the hype fades, only discipline survives because the market doesn't reward excitement, it rewards endurance.